5G stocks are expected to be all the rage these days because the technology is very close to becoming a reality in consumer devices like the new iPhone 5G, for example, which is expected to be released later this year. But there's a whole different side of 5G. One aspect, of course, is the speeds of the business, but the true revolutionary part of 5G is around things like self-driving, virtual reality, and Internet of Things, having devices like cars, for example, talk to each other on the road to make things more efficient and just safer for us overall. It's honestly groundbreaking and it's exciting, and today we're going to be discussing one stock in this 5G space that may be getting overlooked here. Guys, as always, drop that like down below to support the channel, and I also want you to comment in the comment section as to what 5G stock you think I'm going to be discussing today. Don't fast forward yet, just pause the video for a second, put your guess in the comment section down below, and then let me know at the end of this video if you guessed right with your stock pick. Now I'll give you a hint, this is what the stock chart looks like for the business we're going to be discussing today, and it's been around for a long time and has a ton of potential in the 5G space. And no, this is not Nokia, this is not Apple, this is not Qualcomm, it's none of the obvious picks that you constantly see out here on YouTube. So were you able to guess what stock it is? The stock we're going to be discussing today is Xilinx, ticker symbol XLNX. Xilinx is probably one of the hardest names to spell out there, which is why its stock may have sold off so drastic recently. Guys, I'm just kidding, but the stock is down around 30% off its all-time highs, which it hit back about a year ago. It had a massive run-up in prior years, but has been a big loser in recent months as it has gone out of favor with investors. So what does this company do? For anyone in the tech space or familiar with semiconductor companies, you've probably heard the terms FPGA, which are field programmable gate arrays, or SoCs, which are systems on a chip. And guess who was the inventor of these? It was Xilinx. You know, those little things, those little chips you see on the electronic component boards, on motherboards, and most of you guys probably don't even pay attention to these, but they are typically the brains of the board, really. These chips have very specific functions that you can program, and over the years they've just become more and more efficient. The latest innovation here from Xilinx is something called an Adaptive Compute Acceleration Platform, or ACAP for short, and you can see the progression here over the years of how they've gone from FPGAs initially to now ACAPs. All of the things that Xilinx develops are essentially the bare bones for building tech components, and using Xilinx technology, it helps businesses develop rapid innovations across a wide span of industries and technologies, from consumer products to cars that have some smart technology in them to cloud-based applications. Along with this, one of the exciting growth areas they're focused on is data centers, where their chips can be used for many things from machine learning to image processing to data analytics. They're literally in the roots of the tech world here with their chips, but because they are kind of a behind-the-scenes company, they don't get a whole lot of attention here. This list here shows just how expansive their technology is and how many areas it can be applied to, and we see 5G pretty much at the top of the list here. This is because whether we like it or not, 5G is the future, and at the end of the day, time and time again, if you look through the company's website, reports, any filings that they have, you'll notice that the three pillars they want to continue focusing on are data centers, automobiles, and you guessed it, 5G. So it's clear to me that this company wants to be a big player in the 5G space, and you're probably wondering why I believe the stock may actually be undervalued here today. In 2019, they had stellar growth, guys, 24% revenue growth year over year, and this was a very popular growth stock during that time. EPS also rose by 30%, which showed continued strong performance in the business. But when we look at this year and next year's growth projections, things have taken a hit considerably. 2020 revenue is expected to actually shrink this time by 6%, but 2021 is expected to get back on growth by around 12.5%. This is a far cry from the 24% they saw in 2019, so naturally the high growth investors rushed out of this stock. Now, at their 2021 revenue estimate of $3.34 billion and the current market cap of around $22.68 billion, this gives us a price to sales premium of around 6.79x for Xilinx. Now, I'll be honest, around a 6-7x here is not too bad here for a high growth company, but to really justify this, I have to believe that in the next couple of years, they get back to that 20% growth that they saw just last year. Well, just a few days ago on June 29th, the company came out and updated its guidance for Q1 fiscal year 2021, and this sent the stock on a small rally. You can see here that they restated their revenue and it's still expected to be around the low to mid $700 million range, and their gross margins are actually expected to rise by around 1%. And one thing you may notice here is that their tax rate increased significantly, and this is due to a one-time charge from a third-party legal proceeding. So it looks like investors are happy with this update here because it doesn't look like things are getting worse for the business, and investors may be thinking now that things have bottomed out and things can only get better from here on out. Now just note the company expects to report their earnings, I believe, towards the end of July, so there's going to be a lot of eyes on the stock around that time because investors will definitely be hoping for some positive tones hopefully for 2021, maybe in 2022 growth to return back to where it was in 2019. So now by this point you understand what Xilinx is, what they do, what the stock kind of looks like right now, what their valuation from a high level looks like, and it may actually make sense as to why the stock is undervalued. But the next part we need to look at, which can conclude our analysis here, at least from a high level on Xilinx, is their financial statements. That includes their balance sheet and their income statement. So starting with their income statement here, you can see that just based on the information that I provided you earlier, that yes, revenue was down, dropped by 8.7% year over year. Their costs, however, also dropped by around 15.5% for this revenue, which is a good thing to see because it's a larger decline than their actual revenue. But at the end of the day, all of this and their other costs resulted in a net income drop of 33% year over year. But the silver lining here is that they are still a profitable business. I also want to throw in this chart here that I came across, and you'll notice that this is a very cyclical business, as many semiconductor companies are. This could be the beginning of a few quarters of negative growth for the business, and based on next quarter's earnings guidance that they posted, it looks like the declines here will continue in the short term. But sooner or later, guys, as the economy recovers and 5G investments start to pick back up once again, this business is poised to get back to growth in my opinion. Now let's look at their balance sheet to figure out if they have a good enough standing here financially to consider as an investment. Looking at their assets, they have around $2.26 billion in cash and around $2.91 billion in current assets, and this all adds into our total assets, which is around $4.7 billion. Comparing this to their liabilities, they have around $1 billion in current liabilities, $747 million in long-term debt, and a total of $2.37 billion in total liabilities. This, guys, is a good balance sheet in my opinion, and they have enough liquidity to cover short-term obligations and pay off that long-term debt if they wanted to. Their total assets is around 2 times as much as the total liabilities, which is very healthy. So this balance sheet definitely gets a pass for me. It's a very good looking balance sheet, a very healthy balance sheet here. And the company has tons of cash that's liquid, ready on hand to pay off any short-term obligations or even long-term obligations if they wanted to. This puts them in a position of strength. It puts them in a position where they can take advantage of acquisitions if they wanted to. And who knows, maybe that does happen because this semiconductor space is massive. There's so many companies here that play that are small niche players, which could make sense as an acquisition for Xilinx. So let's summarize here. So Xilinx is a pioneer really when it comes to semiconductors and chips, FPGAs and all that kind of stuff. And they really want to be another pioneer, another leader when it comes to 5G. They've had a rocky quarter recently, but in my opinion, the stock price more than reflects that. Investors are definitely pricing in a bad year for the company, and that's kind of expected at this point. However, this is a cyclical business, and this could be the down cycle that we're in right now, and eventually things pick back up and we start moving higher. They're also a very profitable business with a good balance sheet like we just looked at, so that's another huge plus here. And of course, their price to sales ratio is around a 6.79x, which is not too shabby, especially considering the future growth that this company could experience. So if you're asking me, I mean, yeah, I would say that I'm interested here in Xilinx at this current price. Looking at their chart, I think the price right now at around $100 per share is a good value here today, but not a great value or a screaming buy where the stock is severely undervalued. The prices that we saw back in March, which were around $70 per share, those prices were a screaming buy. But at that time, I was focused on building out other quality businesses in my portfolio. I didn't even look into Xilinx, to be honest. Back then, when it hit that $70 mark, it was valued at around $17 billion in market cap, and this would have had a price to sales premium of just over 5x. Hindsight, guys, price though is 2020, and today you're paying around a 6.79x versus a 5x just a few months ago. But again, the slight bump up in the premium here can be justified if you believe they can be one of the biggest players in 5G as they get back to growth in the next year or so. So really, when it comes to looking at 5G stocks, I think Xilinx has a very unique position here in this market. It's not like your typical Nokia or Ericsson, which are more kind of on the base station infrastructure side, or not like Apple where it's more consumer facing. These guys have their own little niche here where they're developing chips, and those chips can be used across tons of industries as we saw. But because they're not consumer facing, this business really relies on other businesses directly buying from them. So we need to see business spending in general pick up here over the next year or so, and that will definitely boost revenues and profits for Xilinx. So I think really, guys, for all these reasons, the stock could actually be considered as an undervalued stock today. I think the premium is not out of this world at all. I think it's very reasonable. And again, I'm going to restate this once again. If you believe that they will get back to around 20% plus growth in the next 2 to 3 years, this is definitely a stock that can run back up to its all-time highs and surpass those levels. So guys, I really want to hear in the comment section down below if you at least learned about this business better here by watching this video. I want to focus really on teaching you guys about new businesses, covering new kind of high growth stocks, tech plays, just companies out there that don't really have a lot of coverage on YouTube. And if you find these videos useful, all I ask is you hit that like button down below to let me know so I can continue creating content just like this. But anyways, guys, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.